San Diego home prices ticked up this week, but a deeper dive into the metrics shows a market that's teetering. When we look at price and inventory trends, we see that this week is probably the exception and not the rule as we look forward to bigger price declines in the fall and winter. Welcome to the San Diego Real Estate Roundup for September 18th, 2024, brought to you by Blueprint. When you work with me and Blueprint, you can save thousands on your realtor fees. Why pay 2 or 3% when you can pay a low, flat fee for top-tier buyer representation? Learn more at buywithblueprint.com. Now, let's get into the numbers. Well, we have mostly good news for buyers this week, and mortgage rates are no exception. We're looking at a graph of the past 12 months of the average mortgage rate on a 30-year fixed-rate mortgage, and as you can see, rates have never been lower when looking at the past 12 months. Mortgage rates bottomed out on 9/11 at 6.11% and ticked up just slightly on September 12th to 6.15%. Now, these rate drops are ahead of the Fed rate cut expected later this month. When the Fed does cut rates, that should bring the mortgage rate down a little more, though the mortgage rate is already factoring in the expectation of the Fed rate cut. So we might not see rates significantly lower than this in the near term. Now let's take a look at our local numbers. We're looking at the latest weekly print from Redfin for the San Diego metro market. The median sale price of a home in San Diego climbed this week up to $904,000. This is the first time that the median sale price of a home in San Diego has been above $900K in 4 weeks. The new listing median price of a home in San Diego, and this is the price at which homes are coming to market, fell off about $1,500 this week to $936,273. New listings in San Diego this week fell in absolute terms, but grew in year-over-year terms. Last week, we had 600 new listings and were 16.9% year-over-year. This week, we fell in absolute numbers to 590 new listings, but grew year-over-year to 18%. Now, if we scroll down to the year-over-year graph, we can see that our amount of new listings relative to last year is continuing to grow toward the 20% mark, which is where we spent much of the year prior to the summer. And we have a similar story in homes sold this week, where the absolute number fell, but the year-over-year growth grew. Last week in San Diego, we sold 508 homes, which is a growth from last year of 3.5%. This week in San Diego, we sold fewer homes, 493, but that represents a 6.2% growth over last year. One would have expected that because about 6 weeks ago, pending sales grew above last year's pending sales. Pending sales is a leading indicator for homes sold because a home goes pending when it enters the escrow process and then becomes a home sold when it exits the escrow process 4 to 6 weeks later. But we can see that pending sales is declining back toward last year's numbers, meaning that in a couple weeks, we'll see homes sold again trending with last year's numbers. And now we're looking at active listings, the total number of listings on the San Diego market, which continues its slow decline. Right now on the San Diego market, we have 5,124 active listings, which represents 48.5% more active inventory than this time last year. This explains why home prices are barely north of last year's numbers. To put it plainly, there is a lot of inventory on the San Diego market. That message is reinforced when we look at weeks of supply, which balances the raw supply numbers against the raw demand numbers, that is active inventory against homes sold, to give us a sense of how many weeks it would take to sell out the remaining inventory. The higher this metric, the more demand-adjusted supply is on the market, and as we can see, this metric really jumped up this week. We're now at 11.2 weeks of supply on the San Diego market, which is the highest point all year, including this bump in January. And such a high level of inventory relative to what's expected down here in the 7 to 8 to 9 week range points to price declines ahead. In fact, we're seeing price declines in the form of price drops of listings already. Price drops kicked up this week to 6.4%. That is the highest level of the year, though it's tied with the peak we saw in August. To me, though, the most telling metric right now is the average sale to list ratio. Now, this is the ratio of the average sale price to the average list price. And this right here, it says 1.00, but that's another way of saying 100%. So when prices are above the red line I just drew, homes are being sold for more than they're being listed for. And when pricing falls below this red line, it means homes are selling for less than they're being listed for. Now, if we look at the red graph line here, this is 2021. This was a red-hot, blazing year for home prices. And as you can see, the average sale-to-list ratio never fell below the 100% mark. 2023 last year was a more traditional year in terms of how pricing moved during the course of the year. And as you can see, we climbed up over the 100% mark around April and fell under it sometime in late October. 2022, the black line, was the year that home prices collapsed because of rising interest rates. And as you can see, we fell under the 100% average sale to list ratio line in early mid-August. But this year, 2024, we fell under the 100% mark back in early August. Let me clean all these doodles up just to show you that this year marks the earliest drop under the 100% average sale to list ratio mark of the last 4 years. And this ratio has been declining since way back in April. To me, this is the biggest indicator that we're headed for more and more price declines headed into the fall and winter. With rates being very low, this is a great time for home buyers. Probably the best time we've seen since, well, before rates doubled. Is the market going to stay this home buyer friendly? Subscribe and catch next week's San Diego Real Estate Roundup to find out.